Good afternoon, shareholders and visitors. We now present the report for the financial highlights for tTech for the year 2018. In 2018, we saw growth in both our managed services and consulting services, which Chris explained earlier, will always have an impact on the revenues that we earn in any given period. So as revenues increased by 30.7% compared to 2018, we also saw an increase in our expenses up to 31.8%. As we continue to grow, the major areas of investment that tTech engages in is investment in both our people and our tools, and this is in response to the demand for our suite of services. We are seeing in excess of 10% growth in our pool of people to support our service delivery and also to increase our efficiency in our business. Regarding our revenue performance, our revenues, which consist of both our recurring revenues and projects, increased by 15.2% from our new customers. Due to this mix in the nature of our business offerings of managed services and projects, we will see bumps in our revenues over time as reflected by this graph. In 2018, as we said before, we saw 15% of our revenue from new customers. Regarding our net profit performance, we have seen a growth from 2017 of $27.5 million being our net profit, which is attributable to shareholders with an earning per share of 26 cents. And this is a growth, as mentioned before, of 18.6 in 2017 to 27.5 for 2018. These net profit, our final net profit performance was impacted by both gains, losses from the fluctuation of the Jamaican dollar, along with reduced rates from our investment portfolio, and these are both impacted our overall performance. Regarding our asset and our shareholders' equity, during the year, our assets increased by 19.8% to $250.2 million. Our equity increased by 11.5% to $198 million. We also saw improvements in our cash resources of 17.3 to $35.8 million at the end of the year. tTech has no long-term debt, and this low leverage allows the company and the business model of the company to provide services which does not require costly fixed expenditures or maintenance of inventory. In 2018, the financial reporting arena was impacted by the introduction of new international financial reporting standards, which impacted our financial statements, and these were shown on pages 46 and also in note 2 of the standards. So as the auditor had read before, there were detailed checks done, there were additional information required, and these would have resulted in what we present to you today. We look at our Q1, where we see just a dip, as Chris went into detail about the reasons why for Q1, and we expect, as I said before, these are impacted by the type of projects we do and not just our monthly revenue. So we'll always have dips as we go along, but our performance for 2019 is expected to exceed our 2018. We mentioned just now the IFRS notes, and the two primary ones which were also mentioned prior were the IFRS 9 on financial instruments and IFRS 15, which is revenue from contracts with customers. So as a business, once you have any cash at all, you will be impacted by IFRS 9, even if it's just your regular day-to-day operational account. For IFRS 15, as a company with long-term contracts and short-term, the impact of IFRS 15 requires more details than would normally have been required to show on your financial statements, and tTech adhered to these standards. And the impact is also shown on note 5 on page 72 that shows the impact on our revenues and also the expected credit losses, which impacted us in both receivables, inventory, contract liabilities, and retained earnings. So these required us to make some adjustments to both our opening and closing figures based on the new standard that required from us. As at the end of March, this graph shows where the movement in our share prices are. The starting price would have been when we went to market in our IPO in January 2016, and it ends at March 2019. And we have seen a growth that when we went to IPO, we had 340 shareholders, and as at March 31st, we have 590. We continue to see an actively traded stock and a market reflection in our share price. Ladies and gentlemen, the board and management are confident about the future of tTech Limited as our balance sheet remains strong. We continue to explore opportunities, as mentioned before, for new partnerships in 2019 while seeking revenues from markets outside of Jamaica. We aim to continue growing our shareholder value and providing an insanely good customer experience in the delivery of goods and services to our customers. Thank you.